All right, welcome back, traders. John Caruso here, September 13th. It is Wednesday. We're going to do a quick futures market outlook for you guys. Take a look at four different markets, the S&P 500, the 10-year yield, gold, and then, of course, we're going to do a look in on the oil market. This morning, we did see the August CPI reading come out. That did come out hotter than expected. Month over month, we did see that tick up 0.6%. Core also ticked higher at 0.3%. Year over year headline came in at 3.7. Wall Street expectations were for about 3.6, and the Cleveland Fed nowcast was forecasting 3.8. So it came in at 3.7, and core year over year came in hotter than expected at 4.3 as well. So it was a hot reading. Largely, the month over month change or uptick in inflation was led by energy prices. Naturally, we have seen a roughly 30% rally since the beginning of July in crude oil prices. I believe gasoline was up 10.5% within that month over month change on that CPI number as well. So let's jump it off here. We're going to take a look at the S&P 500. I'm going to show you two different views. Right now, I've got a continuation chart up in the S&P 500. Clearly still working with a bullish trend. Something did change over here where the market did correct about 5 to 6% in here. And now we've been kind of chopping our way back up. Still have yet to reattack that high up at 46.34. Now, as I look at the chart, we're still struggling at this 78.6. And mind you, this is the continuation chart. This is not the December look. We did see the December contract actually gap higher off of the roll. So right now, still having trouble at that 78.6 level, which comes in right around 45, 44. We did mention when we were looking at the September contract in the last outlook was that any close above 45, 42, that's what could potentially unlock higher levels in another run at this old peak up here, up around 46.34. Now, if I switch over to the December contract, you're going to see that swing high is going to be much higher. That swing high on the continuation chart was right around 45, 44. That swing high now on the December chart is upwards around 45.95. So you can see here, we still could ultimately chop our way back up before taking out that key swing level of 45.95. So we could potentially retest a little bit higher in here before perhaps we see some more chop and ultimately a correction, which we're forecasting out into October. I do believe that we are still in a very risky period for the market. And in October, we could see some more downside in the S&P 500. But in the meantime, we're just kind of chopping. We've established this range here on the December contract of the low side of about 44.85 and the high side of 45.95. So we could ultimately chop in here for a few weeks before ultimately picking a direction which we think resolves on the downside for a deeper correction out into October. However, we do believe that that will also bring a pretty good buying opportunity going into the end of the year. But ultimately, over the, we'll say the intermediate term or the next 3 to 6 weeks, we do think we are going to see more downside in the equity markets or more risk off, we should say. So that's a look at the S&P 500. We're going to take a look at the 10-year yield, which we're getting an interesting reaction right now in the 10-year yield. We're actually seeing it down on the day. Right now, it's showing it down about 12 basis points on the day, which leads me to believe that this CPI number that came out was already baked into that number. It was already priced in. So to see this reaction on the downside is starting to perhaps suggest that we might see another chop to the downside, potentially as deep as this 41.11 area. That's the low end of my range down there. This key support area or swing low comes in at 4.05. If we were to break 4.05, perhaps something is changing in that market. But right now we're seeing this outside day move down in the 10-year yield, which could ultimately lead to some more downside chop as that CPI number looks to have been priced in. It's going to be interesting to see if we can retake this 436 level up here, 4.36 in the 10-year yield. If it were to do that, then your next logical upside target would be the psychological level of 4.5 on the 10-year yield. But clearly, the action I'm seeing in right now, not seeing that. Still very much positively configured, but we could see this ultimately grind back on the downside. Of course, tomorrow we are going to hear from the ECB as well as receive the producer price index as well. So we're going to be keeping an eye out for that tomorrow morning. And that's a look at the 10-year yield. I do ultimately think that we might try to get a bond market rally in here that might ultimately fail one more time. Perhaps we could just kind of start to carve out a trading range in the bond market or the 10-year yields. We'd say about 405 on the downside to potentially 435 to 436 on the high side. So that's a look at the 10-year. We're going to look at the gold market right now. Gold looks weak in here. We did have that attempt on the upside, got as high as 1985, rejected, and we've moved back down, sitting right on top of the 200-day moving average. I still have this largely listed as bullish trend, but really it hasn't gone anywhere since April, May. We've been largely kind of trapped inside of this 2,000, this $100 range, 2,000 on the high side, and we'll call it 1,900 on the downside. So largely sideways chop. Not quite oversold down here. Momentum's breaking down to negative, sitting on the 208 moving average. It's largely, like I mentioned, just kind of sideways, meandering sideways, really doesn't have a catalyst. Right now, gold prices and silver prices largely have a US dollar and an interest rate problem. So if we are, we just went through my analysis on the 10-year yield, if we are about to embark on a period where yields might come off a little bit here, back into that 411, 405 area, that is something that, perhaps gold could begin to find its footing on the high side. We are ultimately bullish on gold on the long term. I do believe that you should still be accumulating in small size on down days and oversold signals in the gold market. But clearly gold just is not ready to reattack higher prices at the moment. Still largely has that U.S. dollar and 10-year yield problem. Taking a look, we're going to lastly check in on the oil market. Oil prices sitting just under 89 this morning. Very, very strong tape in here. There's nothing negative I can really say about crude oil prices at the moment. I even have this positive divergence that's happening. That's where my overbought, oversold line is declining while price action continues to rise. That is a positive divergence and could still suggest we've got higher prices to come. Ultimately, I do think we're going to reattack these old past peaks up here that came in right around the end of last year, which comes in right around 93.30. So my upside target is 93.30. If we do see some modest pull down in here to about 87.40 to we'll say 86.30 on the downside, I do expect ultimately that we will stave off any further downside from there and reattack prices higher. If we do break under this 86.40 level and hold, if we close below there, then perhaps we could see another deep correction back to this peak of 84.70, maybe even a little bit deeper down to 83 before we eventually find our footing and reattack that 93.30 area. So I do have my past drawing in here. We did have crude oil priced to move higher into the end of the year. We did expect after this period of weakness, we did actually think we would bounce in here, fail once again, ultimately come down into about 76, which was about the 61.8 Fibonacci retracement from this low right here to this peak. It had other plans. It bottomed early, and we just powered through this resistance area, and we really haven't looked back yet. So still largely positive on crude oil. See nothing negative in here. I'm actually starting to get an immediate term oversold signal down here in crude, even despite the positive price action that we've seen. So if this were to come in a little bit deeper into here, price were to pull into 87 to 86.40 area, could be setting up for the next launch pad into 93.30. So that's a look at four markets for everybody out there. If you have any questions, if you want us to review any other markets, feel free to ping me at jcaruso@rgofutures.com. Best of luck to everybody out there. We'll catch you back here next time.